I'm Jan Arsenal, and I lead the team that produces our quarterly newsletter, Market Point. Let's start with a quarterly market recap. Both equity and fixed income markets were essentially flat over the past 3 months. Both asset classes started the quarter strong, but some unexpected news out of China, combined with the inability of Congress to move forward with key pieces of legislation, were enough to trigger a correction in the final weeks of September. There's no doubt that the surge in COVID cases in Q3 was an important headwind for the world economy. Unlike in Q2, when the decline in COVID cases led to greater mobility and accelerating economic activity, the last 3 months proved to be a bit disappointing for growth. Despite weaker growth, inflation stayed elevated throughout the entire quarter, as labor and supply shortages remained widespread, preventing many companies from meeting customer demand. Another reason for weaker than expected growth over the past 3 months. As the chart here illustrates, only the US has so far been able to return to the level of economic activity prior to COVID. Every other developed nation is still playing catch up. All in all, the economic recovery continues, but the pace of acceleration clearly slowed in the third quarter. Within equities, investors favored the relative safety of US stocks, which indirectly benefited its largest sector, technology. Looking forward, however, we believe that the more economically sensitive and cyclical sectors of the economy are better positioned to outperform, so we remain tactically underweight the technology sector. Bonds performed well in the early part of the summer as COVID cases surged, but then lost ground later on as inflation trends and the recognition by central banks that inflation risks are building led to a sell-off. Despite higher volatility in markets in the past few weeks, we continue to believe that this is a good time to be invested, as end-of-cycle conditions are still not on the radar. As always, our clients' portfolios continue to reflect our best ideas. To start with, we tactically continue to favor stocks over bonds. Within equities, we believe value stocks, especially small-cap value stocks, remain cheap. Within value, we favor economically sensitive and cyclical sectors like energy and financials. Within fixed income, inflation protection continues to be an important component of our clients' portfolios. As we expected, inflation has exceeded all expectation this year. And as a result, inflation-protected strategies continue to be one of the best performing high-quality fixed income asset classes, and we think more gains in that segment of the market are likely. We are also maintaining a short duration call in portfolios and expectations of higher long-term yields in the second half of the year. Thank you for listening, and I certainly hope you enjoy reading our newsletter, Market Point. Please click the link in this email for a more complete review of our thoughts and insights. For additional articles, newsletters, and more, make sure to follow us on Facebook, LinkedIn, and TrustPointinc.com. Thank you.